All right, some union federations have welcomed the South African Reserve Bank's decision to hold its repo rate at 8.25% for a second consecutive time. This after consumers came under heavy financial pressure since 2021 when the central bank hiked borrowing costs by a combined 475 basis points. Now, South Africa inflation edged higher in August, 4.8%, but was well within the central bank's target range of between 3 and 6% or so. An analyst said that they still expected interest rates to be left unchanged this week. So headline consumer inflation again, 4.8% year on year in August from 4.7% in July. Core inflation up to 4.8. That was also 4.7. Joining us from Cape Town to discuss the Reserve Bank and plus other things South Africa as well as the August inflation as well as the macroeconomic performance. Chris Hart, Executive Chair at Impact Africa. Good evening, sir. Thank you so much for joining us on the show. Kicking things off, what was your take on the hold that we saw with the Reserve Bank?
Yeah, I think the decision was a split decision and a very marginal split decision. There were at least 2 out of the 5 members that wanted to actually vote for a 25 basis point increase. But I think clearly, as you alluded to earlier, the interest rates have gone up very quickly over a fairly short period of time. And that's really proven to be an interest rate shock in the market after interest rates were down for a long time. And that's post the COVID period. And I think at the end of the day, the Reserve Bank is facing really what I call classic stagflation conditions. They have noted that the inflation pressures have eased in the short term, but as you could say, murky in the medium to longer term. They're not sure whether inflation will actually stay down. It's not certain. We're seeing fuel prices and food inflation is, that affects everybody. It's not like, for instance, the price of televisions are going up and that's pulling the price of inflation up, but nobody buys TVs every day. We've got a problem that with everyday occurrences, the actual experienced inflation rate is much higher than the official inflation rate. And yet it's not something that interest rates can necessarily solve. A lot of it is because of imposed costs in the economy, electricity being one of them, and that's where we've got the problem that the Reserve Bank faces is really a tussle between inflationary pressures and very, very sluggish growth prospects. I mean, we're talking about well below 1% growth, right, for this year. And although they always have a forecast where whatever it is now, which is a really dismal number, it will be higher next year and the following year. But with the interest rate shock that we've had and the lack of investment that we're getting in other words, the investment levels of gross fixed capital formation is well below what we should be achieving to actually get the growth that we need. We've got a government that's really shifting capital and resources towards consumption more than ever and away from investment. And that's really the conundrum that the country faces. It's not much that the Reserve Bank can do. They can try and hike inflation or interest rates a little bit more, but that really will kill what's left of the economy. And with the unemployment rate that South Africa faces, that is probably the biggest crisis. And it's not a crisis, it's actually an emergency that we have to deal with. And yet this is something that's been persistent for a long period of time. Economic growth is not keeping up with population growth.
Thank you so much for the break. It's always fascinating talking to you about the South African economy. But and you've mentioned stagflation. So you've got rising inflation, you've got high unemployment, you've got stagnant economic growth. There was some news that Stellantis, for example, is going to invest about the equivalent of $160 million in South Africa's auto industry. Does that give you any reason to be encouraged about investment coming in, or is that a drop in the bucket? Is that not enough?
It is encouraging, and I think the point is that this is something that does happen, and there is still investor interest in South Africa. Right, we just need to undo some of the barriers and obstacles that we put in place. The biggest problem with investment in South Africa is that it occurs mainly at the top corporate level, right? And we actually need an urgent mechanism to get capital down at community level, and where capital formation can be available to your small and medium enterprises. That's where the actual gap is in the financial markets in South Africa. I think you can appreciate we've got superb financial markets, a superb stock market, a superb capital markets, etc. The money market, it's about the only market in South Africa where, say, a pension fund can construct a fully balanced portfolio from what they actually with the instruments that are available to them. But there are no what I call institutionalized mechanisms to get capital down to the small guy. And it's probably not just in South Africa, but probably across Africa, which is why SMEs struggle. But you have great, what I call prestige projects, really, that are able to grow and flourish. And again, it really reflects in South Africa the structure of the economy, a superb corporate sector, but a struggling SME sector.
Thank you for that. Now, correct me if I'm wrong. Aren't there elections next year or 2025? Do you think that the government is going to be doing anything to address this issue that you've raised, where you've got a healthy corporate sector, but money is not trickled down to SMEs? You think that will be addressed anytime soon? And when are the elections?
The elections are next year, and I think there's conflicting polling, but certainly the municipal elections previous year do indicate that the ruling party may struggle to even attain a majority. In other words, after 2024, there may well be a coalition government coming in, and the indications that we're seeing from the ruling party at the moment is that they are looking to ramp up populist measures. In other words, things like basic income grant, national health insurance. In other words, they are actually looking to further push resources into consumption and away from investment. And that is very, very concerning, because we're looking at a tax base that is really being crushed at the moment. And we can see this with a lot of people emigrating. In other words, we are doing a great job exporting our tax base. In other words, we're not giving our taxpayers a good deal in that sense, and we need to give them a better deal to actually attract investment. The whole point about that, South Africa is competing for capital with other countries around the world, and we're not cognizant of that. In other words, we're not trying to make South Africa more attractive for capital to naturally flow to South Africa. Plenty of opportunity. The markets exist to absorb that capital, but we're not. We are squandering that opportunity at the moment, which is very unfortunate.
Wow, 2024 is going to be a huge year. Elections in South Africa, elections in the UK, elections in the US. But let me bring you back to inflation, because you've talked about the need for capital to flow in. You've talked about the little guy, the SMEs. What's your inflation outlook as far as the rest of the year is concerned going into 2024?
At this stage, it looks like the Reserve Bank in their statement alluded to that the actual conditions in agriculture may well be negatively affected by El Nino effects in the, from a climate point of view. And if we have a difficult agricultural year with food inflation where it is at the moment, we're going to see persistently high food inflation. And that, of course, combined with unemployment, which is really very, very sticky at levels above 32 and 33% on the official, ILO measure, we're going to actually have a very, very difficult and uncomfortable time. You add high food inflation along with load shedding, electricity cuts, and water cuts increasingly that we're seeing that are related to the load shedding, but also inadequate investment in water structure. You're actually creating almost a perfect storm of difficult circumstances. And yet, South Africa is still a very livable place. It's a great place, but we are at the edge. We needed to. These are issues that needed to be fixed and could have been fixed. And we're looking at a situation which is really not great. And of course, no water, no electricity, especially in rural areas, you're going to affect the rural economy a lot more than you are going to affect the urban economy from that point of view.
Chris Hart, Executive Chair, Impact Africa, thank you so much for giving us the blunt assessment of the South African economy. Really, really informative. Always great talking to you. Thank you so much for your time.